Welcome back to the first portfolio review of 2025, and it's been a busy one in the last 2 months. There were a lot of moves in the portfolio to prepare for the new year and how it's going to continue growing the portfolio further. So far this year, on January 31st, the S&P 500 is up 2.93%, the Nasdaq 100 is up 2.4%, and the TSX 60 is up 3.32%. Before we get into the review, my goal for this year is to get to 1,000 subscribers, and we're just about already there within the first 2 months. So if you enjoyed this type of content and would like to follow along, feel free to like and subscribe and to help out the channel. Now let's quickly get into the portfolio review. Starting off within Wealthsimple, things are going to look a bit different going forward with the addition of a new account for the TFSA. For this year, I've decided to start self-managing it going forward, after I've now gained some experience with the non-registered account over the last 2 years of investing. As you'll see later on in this video, I'll be funding a large portion of the contribution room by liquidating some of my holdings in my non-registered account, and then I'll be filling in the rest of it with the dividends I receive throughout the year. I also have an RRSP here as well, but I'm still trying to figure out what is the best way to build it, and I've been a bit conflicted to reveal it yet. But in the meantime, across all 3 accounts, it's currently valued at $115,055 all time at the end of January 31st. The performance is a $35,121 gain over the last 2.5 years, or positive 43.94%. On the 1-year performance, there's been a $27,687 gain, or positive 31.69% increase. On the 6-month performance, it's been a $16,232 gain, or positive 16.43% increase. On the 3-month performance, it's been a $13,254 gain, or a positive 13.03% increase. Then finally, on the 1-month performance, it's been a $2,526 gain, or a positive 2.24% increase. The account as a whole peaked in mid-January around $117,000, so it's just slightly off the all-time highs currently. Next, we'll go into the non-registered account to take a look at its performance. To start off, it's currently valued at $96,214. But it was over the $100,000 mark before I began moving funds over to the TFSA. This can be seen if I hover over the chart, and you'll see on December 25th is when this account was at its all-time high of $107,863 with net deposits of $73,390. If I move the mouse over now to the current day, you'll see that the net deposits have now decreased to $62,990. In going through with this process, I've realized that the all-time returns on Wealthsimple are going to look a bit inflated as I move more funds over to the TFSA. This is because of the net deposit value and how the all-time returns are calculated from this as its base. So as the base gets smaller, the returns will look much higher. A simple example of this is if we had a $10,000 all-time return, and the net deposits in the account were $5,000. That would be equal to 100% gain because you doubled your initial investment. But if I now withdraw $2,000 to transfer to my TFSA, the net deposit amount in Wealthsimple has now decreased to $3,000. This now means my all-time return has now more than doubled to 233.33%. Of course, this is an exaggerated example, but it's to help give a clearer idea of how this affects the numbers and how the number I have on my spreadsheet is lower than this return in Wealthsimple. I've stuck to calculating the returns with the full net deposit amount, but I've been considering changing it to factor in the withdrawals like Wealthsimple has done so here. I'll give it some more thought over time, but this is just extra information on how Wealthsimple calculates their values for those of you who are interested. Now for the numbers, as you already see on the screen, the all-time return is $33,224 or a positive 52.75% increase. On the 1-year performance, it's been a $24,794 gain, or a positive 34.72% increase. On the 3-month performance, it's been an $11,283 gain, or a positive 13.29% increase. On the 1-month performance, it's been a $2,044 gain, or a positive 2.17% increase. On the 1-week performance, it's been a $1,839 loss, or a negative 1.88% decrease. Then on the 1-day performance, it's been an $849 loss, or a negative 0.88% decrease. Scrolling down, you can see the holdings within this account. I'll be going over this in more detail later on in my spreadsheet, but feel free to pause here and take a look if you prefer. Now going back up to the top and switching over to the new TFSA, the current portfolio value is $9,654 with an all-time return of $254 or a 2.7% increase. If I hover over the chart, you'll see the net deposit amount and the contributions over time so far. Now for the 1 year, 3-month, and 1-month return, it'll all be the same value because it's only been 1 month so far into the account. On the 1-week performance, it's been a $5.14 loss or a negative 0.05% decrease. Then on the 1-day performance, it's been a $48.38 loss or a negative 0.5% decrease. Scrolling down, you'll see all the holdings so far within the account. My goal is to try and keep this as concentrated as possible, so these will likely be the only holdings going forward. Because this is within the TFSA, and any value that is lost cannot be recontributed, there'll be mainly index or diversified ETF holdings in here. I also try to keep in mind the broader picture in combination with the non-registered account, and make sure I'm not too overweight in a certain holding. All of this will be tracked in my custom Google spreadsheet that I built, and that's where we'll head over to now. So over the last 2 months, if I highlight the dividends column, I received $1,824.75 in dividends. Then if I highlight the actualized column, we can see a total of $3,580.45 was gained from all the sales of positions I've exited. Now let's get into the transactions made in December, first by filtering only for the December transactions. On this month, I ended up selling out of NVHE, ENB, ATD, QQQL, USSL, LLHE, and YMET. Starting with NVHE, I'd entered a position on a small dip, but never felt comfortable on the entry. Because of this, it was only a very small position, about $200 to start. I decided to just take a small profit of $44.39 and reallocate it elsewhere for now until a better entry price presented itself. With dividends included, it came to a total return of $48.79. With Enbridge, this is a holding I've held for nearly the entire 2 years that I've been investing. So with it recovering and seeing some gains, I decided to part ways with it to take profits and to add their higher yielding sector ETFs like ENCL and Bank, which were near their lows. On the sale, I actualized a $520.12 profit, and with dividends included, it came to a total return of $999.27. For ATD, this has been a Canadian favorite for growth over the years, but in recent months it's been on a downward trend. So I decided to take profits and to start saving up a cash position for the release of HHIS in January. I actualized a $590.54 profit on the sale, and with the dividends included, it came to a total return of $633.60. The rest of these sales are all very small starter positions, and again sold to accumulate cash for HHIS. Now let's move on to the January transactions, and see what was done in the first month of 2025. To start off the new TFSA, I made investments into QQCL, QQQL, and USSL. QQCL was a bit underweight compared to USCL and the other S&P 500 ETF holdings, so I wanted to even it out in the TFSA by making it the core holding in the portfolio. After I sold QQQL and USSL in December, I re-added them here in the TFSA as growth holdings to experiment. These are index holdings with 25% leverage and should look to have 1.25x returns over time. Because they are growth holdings and don't pay a dividend, these would be better held within a TFSA if I were to sell them in the future. Then I decided to make the swap between YAMZ and AMHE after looking at the performances since inception, along with the fact that AMHE is unhedged and also provides a higher dividend yield. As we've seen the impact of currency hedging on some of my other videos, it has also acted as a big detractor here in this instance as well. While having a big unrealized gain is great to look at, the higher yield means the opportunity for compounding will be quicker if more is paid out. By not selling a holding that is potentially underperforming because of a big unrealized gain is a bit of a psychological barrier. Because if I'm able to get a high return going forward, then it's probably worth actualizing the gain and making the switch. So most of the proceeds from the sale were swapped into AMHE because I wanted to maintain a position in Amazon. Aside from my initial invested amount, the remaining gains were mostly held in cash to put into HHIS. On the sale, I actualized a $2,007.08 profit. With the dividends included, it came to a total return of $2,514.08. Then in the middle of the month, we finally got the launch of HHIS, and I started my initial positions at around $13.20. I then proceeded to sell off RMAX as well, to add more to HHIS and to also start a position in Misty. With my investment in RMAX, I was looking to see a continued recovery in the real estate sector, but this never materialized, and I decided to put the capital to better use elsewhere for a higher potential of growth. In the end, I actualized a $214.58 loss, and with dividends included, it came out to a total return of negative $160.09. And finally, for the last sale of the month, I ended up selling CPX to take profits and distributed the proceeds among a number of holdings to help increase the yield of the portfolio. I added to HHIS to help build it up some more, and I also started a new position again in NVHE with an entry point that I feel much more comfortable in holding. Overall, I actualized a $697.55 profit, and with dividends included, it came out to a total return of $1,072.78. So going forward, the spreadsheet will look a bit different because it will now be a combined portfolio between the non-registered and TFSA accounts. Each one still has their own individual tabs, but having a joint one like this makes it easier to properly manage the allocations and growth over time. If you're interested in a more in-depth look and understanding of how I set up this spreadsheet, I made a playlist where you can get the full breakdown. Feel free to check it out after this video. So to start by sorting the invested column, the top 5 holdings are now QQCL, USCL, YTSL, HYLD, and Bank. This change where QQCL is now at the top is due to the contributions to TFSA and to even out the allocation when compared to USCL. Now that they're even, I'll be looking to keep that fairly consistent going forward as the portfolio grows. Then the smallest 5 holdings are USSL, QQQL, NVHE, MISTI, and ACT. With USSL and QQQL, I started very small positions in them to experiment as growth holdings and plan to slowly add to them over time. Though it's a bit difficult to add to when that same capital could be generating actual income that could be reinvested and compounded. So I'm a bit conflicted, but I would like to see how these do over time. If we now sort the total P&L column, we can see which ones are at the top for unrealized capital return. The top 5 holdings are YTSL, YGOG, USCL, HTAE, and GSY. It's been very tempting to take some profits off on YTSL to lower the volatility within the portfolio, but at the same time I do think in the long term it has more potential to grow. So I'll just continue to hold and collect the dividends for now, especially with the recent distribution increase to 55 cents. Then for the bottom 5 holdings, they are TELUS, MISTI, ENCL, NVHE, and MSHE. TELUS continues to be the biggest loser and will likely stay that way for a while as it starts to recover. MISTI is a holding I just started position in, but with the leveraged version coming out soon, I'll probably hold off on adding more and wait for it to be released. Now filtering by the annual dividends, the top 5 dividend payers are YTSL, QQCL, USCL, Bank, and HYLD. With the recent distribution increase, my yield on cost for YTSL is now just under 32%. So as long as I don't sell, it'll likely continue to be the top dividend payer in the portfolio. Then the bottom 5 dividend payers are GSY, TD, APLY, TELUS, and NVHE. 3 of these are the last quarterly dividend payers in the portfolio, so we'll see when the rest of them get converted to higher dividend paying ETFs. The next column we'll sort by is the lifetime dividends column, which is all the dividends I've received since holding each individual stock or ETF. For top 5, we have YTSL, HYLD, USCL, HTAE, and Bank. These are some of the longest holdings within the portfolio, and are all core holdings, so this shouldn't change too much. As for this next set for bottom 5, most of these are going to have $0 returned, because they are all new positions and have yet to pay out a dividend. So these holdings are NVHE, AMHE, HHIS, MISTI, and MSHE. Coincidentally, all of these are products in Harvest's high income shares, so I don't expect for these to stay here for long. And finally, for the most important column, which is the total returns for each holding. This is the most important measure of performance, because it includes both the unrealized capital gains, along with the lifetime dividends that have been received. For the top 5, we have YTSL, YGOG, GSY, HTAE, and HYLD. Again, a lot of these are long-time holdings, and have continued to grow in total return over the years. I'm still waiting for the first 100% return in the portfolio, and at this point Tesla looks to be the closest. On the opposite end, the bottom 5 are TELUS, MISTI, NVHE, QQQL, and MSHE. Aside from TELUS, these are all mostly newer positions, so if they continue to drop lower, I'd see it as an opportunity to average in for a better price. Then finally, the last column we'll sort by here is the percentage allocation of each holding. The top 5 holdings are QQCL, USCL, YTSL, HYLD, and Bank. This is one area I've been working on to fix for a while now, and that's to have YTSL become a smaller part of the portfolio's allocation. It's been my largest position for probably over a year now, so having it slowly move down and replacing it with index positions helps with the overall volatility of the portfolio. In time, I wouldn't mind seeing it continue to move down in allocation to outside of the top 5. And now for the bottom 5 holdings. They are USSL, QQQL, NVHE, MISTI, and ACT. These are all new positions or my riskier investments, so some of these may end up staying here at the bottom for a while. Next, we'll head over to the dashboard and take a look at the portfolio's performance as a whole. If you've been keeping up with the portfolio review videos, you'll notice that the dashboard looks a bit different here. It's a little bit simpler and cleaner, giving some of the charts a bit more room so that they're easier to read. So to start, we can see that the portfolio value is at $105,851.99. For the total deposits, it's at $72,244.89, and the lifetime dividends received in the account since inception is at $14,129.07. For the summary section at the top, the portfolio saw a $222.05 decrease today, which is basically a flat day. The total P&L, which is an unrealized gain, is sitting at $13,823.87. Then the total return, which is the combination of all the realized and unrealized gains in the portfolio, is now at $33,776.48. So this would be how much I would have made from this portfolio if I were to sell everything at this moment. As for the dividend yield, in the past I've had a personal goal of having it above 10%. But now having over 2.5 years of experience with covered call ETFs, I think it's time to lean into it more and try to maximize it as much as I comfortably can. And that can be seen in the transactions earlier on, where I started taking profits on the individual Canadian companies that I've held since the start of the account, and I've been moving them into higher yielding investments. So because of this, the dividend yield for the account has now increased to 13.90%. With the continual release of newer funds like the ones from Harvest, I can see the yield continuing to move higher as I free up more capital. Then lastly, the annual dividends is what I can expect to earn each year from the portfolio. Because of the yield increasing, this has also increased the annual dividends significantly as well, and is now at $13,898.40. Since the last video, we've now blown past the $12,000 goal, which was the next milestone I was aiming for. A lot of it was also due to the dividend raises from YTSL, USCL, and QQCL as well, which has really made this January quite amazing to start the year. So now going forward, the monthly income for the portfolio is going to be well above $1,000 per month. Moving on to the charts now, if we look at the portfolio value, we can see that it's still near all-time highs. Things have been a bit choppy in the markets, but overall it's still holding up. When comparing to the indexes, we've actually caught up to the S&P 500 and stayed within our range to potentially surpass it. Keep in mind that I've said in the past, this isn't something I put a lot of significance into because it isn't a realistic comparison. This is based on a one-time lump sum investment into the index, while a real portfolio has more money added to it over time. You can pause here to read the additional information or watch previous portfolio review videos to understand why. So to actually have caught up to the S&P 500 is actually somewhat impressive based on what I've outlined. A lot of the reasons why the portfolio has caught up though is actually due to Tesla's crazy rally since late last year and has pushed it to all-time highs. With YTSL being my largest position at the time at around 11%, it has helped close the gap significantly. Now that it's pulled back, I might have to wait for the next Tesla rally to finally surpass it. Now moving on to the projected monthly dividends, as mentioned this will be the first full year where the portfolio will receive over $1,000 on a consistent basis each month. This should continue to grow as all of it gets reinvested throughout the year. Lastly is the projected portfolio value in 10 years, and looking at the 2025 values, they've grown significantly higher with all the changes this month. I'm not sure if we'll be able to reach these numbers, but we'll just have to see. Then for the returns by sector, we can see the sector with the best returns so far relative to the invested amount is the technology sector, with nearly half of my investment returned. ETFs is the next best performing sector, and that consists mostly of indexes or all-in-one ETFs that hold a basket of companies. Overall, the only sector that is still red is the communication services sector, and hopefully we can see that recovery finally this year. So it's been a really great start to the year, and with all the changes, I'm excited to see how we do over time. There's been a lot of new releases already, and with more already coming soon. So if you want to stay tuned for more videos, feel free to like and subscribe to help out the channel. We are now less than 200 subscribers away from reaching the 1000 subscriber goal and should be able to pass it very soon. Thank you to everyone who has subscribed or has kept up with the video since the beginning of the channel. There's lots more exciting content coming soon, and with that, I'll see you in the next video.